If you are trading the smart money concept, or you are trying to learn about the smart money concept, you might have heard about fair value gaps, also known as imbalances. This is actually a concept that was taught in the ICT concept by Michael Hodgson. I'm going to try my best to explain what a fair value gap is for you in this particular video, and then we are going to go straight to our chart and check where to find a fair value gap and how important is a fair value gap. So right here I have a sketch where I try to explain what a fair value gap is for you before we can go to our chart and find them literally on a chart. So in a healthy price action, okay, now we can see on this side of my drawing, we have a healthy price action where we can see price delivering liquidity from one level to another. So in a price action of 3 candles, these are 3 candles, you can see 1, 2, 3. For us to say that we have a healthy price action, we need to see that the high of this particular first candle, this is our first candle, is linked with the low of the third candle. This is our third candle, 1, 2, 3. So the high of this candle needs to be linked with the low of this candle. This is the wick and this is the low, this is the high. Okay, so likewise, when we see this in a downtrend, we need to see that the low of this candle is linked with the high of this candle. This is a healthy price action. In a situation where we cannot see the high of this candle linked to the low of this candle, you cannot spot a fair value gap in between just 2 candles. You need at least 3 candles. So this gap that was left, it was due to a fast movement in price where the buyers were not able to properly allow people to sell. This happens mostly because of a fast price delivery, and then there are not enough liquidity to fill this level. So price will always reference back to this gap, this particular gap that was left. So you can literally see it right here. So there is a gap in between them. This particular gap, this gap is where your fair value gap is. Once we reach our chart, you're going to see how to spot them. So this gap, price will always want to reference back to this gap. So we call this an institutional reference point, which is also known as the footprint of the institution. So whenever price comes back to fill this, we expect a certain action to happen around that level. I'm going to show you how these things work literally on a chart, but just get the idea of what a fair value gap is. Right here you can see a fair value gap again in the down candles, but this is a healthy price action, and then this is an unhealthy price action. So for the algorithm to balance everything, it must come back to fill this gap, whether now or in the future. So this is where the concept of fair value gap comes into play. These are concepts that people understood it differently, but this is just the basic idea behind a fair value gap. Now whenever you see this kind of thing happening, you can say to have a fair value gap. So let's go to our charts, and then we can see fair value gap literally being seen on a price action. Look at what is happening here. Okay, let's see what is happening at this point. Look at a healthy price delivery. Look at this. This is a very healthy price delivery. You can see these 3 candles from this level to this particular level, from this candle, and this candle. We can see that the low of this candle is linked with the high of this candle. You can see 1, 2, 3. 3 candles that are formed there. If you are looking at this, you can see a lot that doesn't respond to this low. So look at something right here. Let me reduce this and show you something I'm seeing right now. Look at this. If you are looking at my candlesticks now, look at this level. The first candle, which is this one, look at this. So we have the high of this candle is not linked to the low of this particular candle, which is a fair value gap. The high of this candle is not linked with the low of this candle. 1, 2, 3. We have 3 candles. That means we have established the condition for a fair value gap to be seen. Look at the gap that was created. The high is not linked to the low of this candle. And then look at price heading up. Look at price coming back to fill it. Look at it. This entire level is where your fair value gap is. Okay, this is where your fair value gap is. Please get this and then simplify your trading experience. So this is one of the reasons where you see people telling you that this is where price will definitely reach out for, because if you see price run away from this level, it wouldn't want to just continue movement. It wants to come back and fill this gap that was created. Look at the gap. Then price took up from that level immediately after filling that gap. This is not an entry signal. I'm just showing you how these things are seen on a chart so you can see. So this gap can be partially filled. Some people use the partially filled level. Now you can take your Fibonacci tool and just measure the range from here to here. And then once you see this being filled to the half level, that is the 50% level, you can take trade. But that is not an entry point. I'm just giving you an idea of how these things are formed. I'm going to show you how these things work literally. Just make sure to subscribe to this channel and have the ideal knowledge of how to use the smart money concept. Then you're going to learn a lot about this. So right here you can see 1, 2, 3. This time around in a down candle, we can see this level. The low of this candle is not linked to the high of this candle. It's not linked to the high of this candle. Look at what happened here. Price decided to start moving away from that level. Price was moving away from that level, came back and tested. Look at what happened in the future. Look at what happened. This fair value gap was later filled. Can you see? Price coming to fill this fair value gap before pushing down again. So this can be seen over and over and over and over again on a chart. You need to go to your chart and practice and practice. Look at this and then look at this level. Can you see? The high of this candle, okay, the high of this candle was not linked to the low of this candle. 1, 2, 3. And then price came and tested the level, came and filled it up at this point, and then price decided to push up to the upside. Look at it. This is a fair value gap. So you can see this over and over and over again. This is a fair value gap. Look at this, and this. Okay, this level. If we are to put our line here, a fair value gap, price came and fill it and then push down. So this can be seen over and over and over and over again on a chart. Look at the fair value gap, this level, this, and then this. Price came back and filled it and then took up again. So we can see this on a chart over and over and over again. So go ahead and check it on your chart. This is explanatory enough. If you have any question, you let me know in the comments, and then I am going to explain it to you properly if you don't understand what a fair value gap is. So this is how to spot a fair value gap. If you find value in this video, let me know in the comments. I'll be right there to keep updating you on the smart money concept. And don't forget to watch all the videos on this particular playlist, Smart Money Concept Complete Course. I want to make sure that you get every single information I'm sharing so that it can be easy for me to keep teaching the smart money concept for you to keep making money in this financial market. Thank you guys for watching. See you in another video.